right here in Zambia. Join our live beginner-friendly online classes. Participation fee only 750 kwacha per session. Investing in Zambian stocks every Friday morning from 09 hours to 12 hours. Learn how to buy and sell shares on the Lusaka Securities Exchange Luse. Analyze companies and make smart investment decisions. Investing in government bonds every Saturday evening from 18 hours to 21 hours. Understand how to invest in government bonds, earn stable returns, and build long-term wealth. Each 3-hour session is packed with practical strategies, expert insights, and live Q&A to help you invest with confidence. Register and pay online at www.insightpartnersafrica.com or send your payment via Airtel Money to 0977 444 604.
And we are back. We are back. Okay, still on the Breakfast Show, and this time, of course, a very important segment as usual on Tuesdays, where we give you more information when it comes to investments. As usual, okay, welcome on the Ndalama Insights right here. I'm your presenter. My name is Chilufya, and joining me as usual, Mukonki Mukonkela. Okay, who happens to be a chartered, accountant and the founder of Insight Partners Africa. Welcome. I can see you're keeping warm.
I am keeping warm. It's cold out there.
Yeah, we're getting used to the weather, or that's when June is starting.
I think we're getting used to it.
We're getting used to
it. Didn't just start last month.
Yeah, but So weather like, yeah. But you just have to keep warm anyway.
Mm-hmm.
I can see you.
And drink a lot of coffee.
A lot of it.
Or tea. For those that tea. If tea is your cup of tea, then drink a lot of tea.
Nice one. All right. So if babies, after if you're driving babies to school, make sure. I hope they are very warm.
Mm-hmm.
Yeah, I'm very concerned with the little ones.
Yeah.
Those are my best friends.
No, they don't like putting on warm clothing, eh?
They don't even like blankets in the night. Can you imagine they kick them away?
Yeah, they kick them away.
Yeah, that baby, issue. But yeah, it's so difficult. And but they enjoy anyway. They enjoy. So coming back to money issues right here.
Mm-hmm.
Yes, today we're focused on what makes a good investment.
Mm-hmm.
Wow, this is good.
Yeah.
This is good.
Yeah.
So what really makes an investment good from an individual, perspective? It's a very important one.
It is.
Please drive us through on this one.
Thank you, Chilufya. So good morning, everyone joining us on the radio, on the buses, online, on YouTube. We have Mr. Simon Mwela, Mulenga Kapambwe, and quite a number. So good morning, everybody. We're talking about how you identify a good investment. And to begin with, I would like to state that a good investment really is personal. It is highly personal. So even as we are going to share these points, you need to personalize them. Some of the personal things that you need to consider include 3 things, really. That's your risk tolerance, the time horizon that you have, as well as your financial goals. So I'm going to just go deeper into each of these key factors, Chilufya. Let's look at risk tolerance. Risk tolerance is all about your capacity to manage any potential losses from the investment that you are making. So you need to check whether if a certain investment is exposed to a certain kind of risk, for example, inflation fluctuations, then you may need to reconsider other investments that are not affected by inflation. So that's the risk tolerance. What is your level of risk appetite that you can take on? Appetites, Chilufya, right?
Oh, yeah.
Some people have got huge appetites, others have got very small appetites. So really, risk tolerance is about what you can take in terms of risk. So, and that is very personal. The second point to consider is the time horizon. Time horizon refers to how long you can keep money in an investment. So if you're a younger person, you probably have longer periods to keep money in aggressive or high risk investments. If you're an older person, you're probably a little bit more conservative when it comes to the time horizon that you're taking in highly risky investments. And it also looks at things like how long do you have in order for you to for that investment to actualize. What What length of time do you have really? So that's the time horizon. Then finally, the third one is financial goals. This is quite important. Your financial goals. What are you trying to achieve with this money? Yes, you might aim to have 1 billion Zambian kwachas, but what do you want to do with that 1 billion Zambian kwachas? Do you want to build a house? Do you want to take your children to university or to school? What are your goals? Do you want to prepare for your retirement? So your financial goals are also very, very important when it comes to determining or assessing a good financial investment. So these are the three key critical foundational factors that you need to consider.
Oh, nice. So from an individual perspective, what should they understand on this one? Just
so that is from an individual perspective. Those are the three things you need to consider.
Nice.
But then there are also general, beyond personal or individual factors. We also have inherent characteristics of a good investment. And these are some of the things that you can also consider. These include understanding the type of investment you're investing in. So very, very critical. Do you understand what bonds are, what shares are, what cryptocurrency is, what property is? You need to understand, have a clear grasp of what you're investing in and how that investment makes a return for you. And also, what are the risks that are involved in this investment? Okay, so this is beyond those personal three items that we considered. The other one is to understand the type of investment you're getting into and how it will make money for you, as well as the risks that you're exposing yourself to. The second most important point, again, Chilufya, is this investment giving you a positive real return? Positive real return. What do you think about it? Let me interview you a little bit. What positive real return? So your investment must give you a positive real return. What does that mean?
Okay, in my understanding, I think you're talking about when it comes to positive real return, it's like the full benefit that I want to see coming from my investment. Yeah, so if it has come in fully, then that's positive.
Yes, fully, but most critically, your investment return needs to beat inflation. If you are making a return or a profit from an investment, let's say of 15%, what is the current inflation rate? Let's assume it's 16%. So if your investment is lower than the inflation rate, it means you are generating a negative return, because returns, you need to take into consideration inflation. Inflation eats into the purchasing power of your money. So if inflation is increasing and your returns are reducing, it means you are losing money. So any investment, a good investment, must give you a positive real return on investment. So you always need to ensure that the return that you are making is above the inflation rate. It's quite difficult to achieve, but there are investments that you can invest in that actually beat inflation, and we'll consider a few. Then the final point is liquidity. How easy is it for you to sell this investment quickly without you making a significant loss? That's another important factor. Can you sell this investment? If you invested in property, for example, can you sell it quickly if you needed the money without you making or incurring losses? That is, if you can, then it's a good investment. So those are the traits of good investments.
Nice. So now, Mukonki, let's also dive into the issue of specific Zambian investment types, especially for those that actually prioritize safety. What are the safest, like the safest, investments, and how good are they? Like, what route can someone take to feel safe as they do their investment?
Thank you. That's a very, very fundamental question. A lot of people want to secure their money to ensure it's preserved and safe. So in Zambia, we've got a few investments. We've got government securities. These are comprised of two investments generally. So we have the treasury bills and the GRZ bonds. These are typically safer investments for Zambians if you want to get started and you are risk averse or you've got a very low risk appetite. The great thing about government securities is that they are backed by the good faith of the Zambian government, meaning that Zambian, especially for local GRZ bonds or even treasury bills, it's highly unlikely that the government is going to default or not pay you. So the credit risk on this is pretty low, because as everybody knows, if anything had to happen, they could actually print the kwachas and repay you back. That is with the GRZ bonds and the treasury bills. So very secure, low risk investments, but also come with lower returns. So these are the government securities. Also, we have fixed deposit accounts. If you've got a bank or a good organization that gives you a good return on your fixed deposit account, that's also a great consideration. So these are the safer investments that you could consider.
Okay.
Mhm.
And on the other hand, okay, as you talk about that, just reminded you. On the other hand, many listeners out there, many people out there, in fact, seek rapid growth when it comes to investment.
Mhm.
Now let's talk about the Zambia's high return investments. Um, are they good, despite the higher risk?
Yes, so we have a few investments that are high risk but good return. Let me start with real estate,
Mhm.
which is something that many Zambians have actually invested in, both residential and commercial real estate. So real estate is a great investment. It generates good returns through rental incomes and also through long-term capital appreciation of your property.
Mhm.
However, it requires a substantial upfront capital, Chilufya, as you may be aware. For you to invest in real estate, you need a good amount of money to build that property. Let's even start by buying that land and building the property. And if you've chosen a location that is not very good, you may not even get the returns that you expected, or you could find it hard to sell that property. It could be liquid. However, if you found a well-located property, the demand is very high, and you're managing it effectively, property is a great investment. So it's a high risk with very good returns, and even though it's got an initial capital outlay that is substantial. The next one is stocks. So stocks are quite high risk. The stocks are risky in the fact that the returns are dependent on the performance of the company.
Mm.
However, they are very significant when it comes to beating inflation and overall long-term capital appreciation. So stocks come with a higher risk and higher return as well. So these are the two investments. When it comes to stocks, I must say you need to be very astute when you're researching and investing in these investments. You should not be complacent. You need to be, aware of the movements in terms of the stock prices and how the value of a share, so that you can buy a valuable share that can grow over the long term. That is the key of investing in the stock market.
Okay. So in short, we're saying diversification is key.
Mhm.
Okay, and especially with the higher risk of options. Now,
Mm.
how do unit trusts fit into this picture of good investment, particularly for new investors out there?
This is great and very paramount. No, I've actually noticed that a lot of Zambians have invested in unit trusts, and it's a great thing. So for those that may not be aware of the advantages of investing in unit trusts help you to diversify your investment naturally. And why? Let me give you a few factors about unit trusts. First of all, they have an inbuilt diversification strategy because when you invest in unit trust, you're investing as a collective. Let me just say. So you are pulling funds with other people whose funds are managed by a fund manager. And this fund manager invests in a variety of investments. They might invest in stocks, local Zambian stocks, even international stocks. They could invest in the bonds, in treasury bills, or even in property. So they have a diversified investment portfolio. Another
Okay.
advantage of the unit trust is that they are managed by professional fund managers. So unlike you who goes to the Luce and selects your own stock or even three stocks and you buy them, the fund managers in terms of the unit trust are qualified, experienced. They wake up in the morning, they go to report to work specifically to do this. You can be doing your journalism where you are, but it's not your full-time job. For the fund manager, it's their full-time job. So they're really experienced and they are really, astute when it comes to selecting good investments. The other one is the liquidity. When it comes to unit trusts, it's very easy for you to buy and sell them because you can easily sell them back to the fund managers. So they are highly liquid and they're a good consideration for short-term investments. So if you're considering investments less than, let's say, 2 years, even 3 years, it's something that you could consider, particularly under 1 year. So these are the unit trusts. Another thing I like about them, Chilufya, is the transparency. It's a requirement that unit trust fund managers show us the performance of these investments through the regular reports that they must issue out. So very, very good for beginners unit trusts. But if you're an advanced investor, you can always go directly and buy the underlying assets, the stocks, the bonds, and the property.
Oh, nice.
Yeah.
Wow, it's been very, very educative. Okay, very, very informative. In closing, what are you telling us about this very important subject today?
So it is an important subject, and I would like us to continue this discussion on our Telegram group. So you can look for Smart Investors Telegram group. You can also check the link. I've got a recorded version of this radio program on YouTube. If you look for Mukonki Mukonkela, you'll find the recorded version of this program, and there'll be a link that will take you straight to our Telegram group where we can continue this discussion. In your opinion, what makes a good investment? So I'd like us to continue this discussion. And also, Chilufya, for those that would like to join me on a training, I do training programs every Saturday, every Friday. Friday mornings, we are looking at investing in shares. So if you're really serious about growing your money, you can join me on Friday, this Friday morning from 9 to 12, where we look at beginner investors. How do you buy your first share? So we cover everything, how you use the Luce app, how you open a brokerage account until you open your first until you buy your first share. So it's on Friday morning, 9 to 12. You can call me on 0977 44 56 04 for further details, 0977 44 56 04, or go to our website, insidepartnersafrica.com, and you'll find the course details there.
Oh, nice. Mukonki, it was good having you on the show.
Thank you so much. It was lovely having you and everybody that was online. Thank you so much for joining us. Matthew, thank you for being there always.
Nice one.
Yeah.
And there you have it. Today we'll focus on what makes a good investment, and yes, we've just been taught on how we should go about this. Okay, it's just a mindset game. Okay, just make sure you know what you want, and then invest, smartly. On the breakfast show, I had, of course, with me on Ndalama Insights, Mukonki Mukonkela, who happens to be a chartered accountant and founder of Inside Partners Africa. Join us on this platform next week at the same time. For now, it's goodbye, and we're still driving together on the breakfast show. Keep it for